Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, June 4th, 2009. Well, folks, there's been an underlying bid in the markets today for most of the day. We've seen Goldman Sachs really leading things to the upside. Oil has had a monstrous rebound, basically taking back everything it lost yesterday as we rebound to basically the highs on oil nearing that $70 level again. We're right around $69.50 right now on oil, up $3.35 as the dollar again is showing some signs of weakness. That's helping the oil trade up. In addition, the big news on the day, folks, there's two big news events really, and they're both really around Goldman Sachs. Goldman Sachs saying that they expect oil by the end of the year to be at $85, then by the end of 2010 at $95. That's helping oil without a doubt get a monstrous bid. In addition, another company upgraded Goldman Sachs with an outperform rating from Market Perform. So right there, everything involving Goldman is turning up roses, and you're seeing the markets catch a little bit of a bid. Now, the markets aren't up huge by any stretch. You're not seeing the markets ripping up 100, 200, 300 points right now. Really what you're seeing here is the markets up about 40 and change on the Dow, NASDAQ up about 15, and the S&P up about 7. So really about 0.5% to 0.75% across the board on the indexes right now. Now, again, as I mentioned, Goldman Sachs is the big leader here. We'll touch on the spiders in a second, but I want to show you Goldman. Goldman has just been on a one-way ticket up today, having a fantastic day, almost up $7. Now, I'm watching for the key $150 level on an intraday basis. We often talk in the chat room about a possibility of a scalp off that level of resistance once it pierces it. So if it does happen to get there today, I'll be watching very, very closely and possibly trading a little bit around that 150 level. All right? But in any case, you can see the monstrous move up on Goldman. Again, 150 should be a little bit of resistance. Usually I let it go through 150 to about 150 spot 25 to 150 spot 50, and then look for a scalp on the way down, possibly for a minor pullback. I would never be in it for more than a scalp. It's way too strong today. But just figured I'd give you guys a little tidbit of what I'd be looking for at some point today. Right now, no trade really in there at this point until it hits that 150 or pushes through 150. Now, let's talk a little bit more on the spiders, guys, because the spiders continue to be very, very strong today. Now, what you're seeing here is the levels on the charts. I've just put in 4 lines along with moving averages. You can see here in the yellow is the 20 moving average sloping up. In white, the 50, and here in light green is the 200 moving average. Now, the beauty about those moving averages, they come into play very, very rarely in this chart right now, but just once or twice, and I'll talk about that in a second. But bigger than anything, what I want to show you guys, know your levels. All right, see this red line? Why do I get this red line here? Why is it such a key line? Well, very obviously, because it's yesterday's high pivot right at the gap window. See the gap right here? This is the high pivot gap. So you have to understand that. Take that red line, put it in there. Where's your top right here? Look at that top perfectly. All right, before a pullback. Good solid pullback off that level. Now we've retraced back up to it here. We pushed through it, pulled back, and now we've broken up. You're coming up to a key level at 94.40 to 94.50. There's a lot of resistance right here at 94.40 to 94.50. That's your next spot to watch. We're hitting it, just beginning to hit it right now. We'll have to see, but really anywhere between 94.40 and 94.50 is going to be a major resistance level. I've talked about that in previous videos, so obviously it still holds true, but right here we'll continue to watch this level, guys, okay? On the downside, notice this. You have this line, see this pink line? Really doesn't come in play until this pullback, but notice how, see this pivot high right here, the high candle after you sold off and then bounced, and this pivot high right here? Take that line, look at how it perfectly comes into play right here along with the 20 moving average, and that's what I wanted to talk about, noting the 20 moving average perfectly necktying with that line for where the markets turn around. All right, everything has symmetry in this market. There's always a reason. All you have to do is find the trend lines, find the moving averages, and know your time, price, and pattern. And this is exactly what we teach in the Research Center, in our nightly videos, in the daily market reports, in the Pro Trader Watch List. It's all based off this kind of stuff, so you can get a good sense of where the market is and what's going on out there. Okay, having said that, the blue line below, take a look at the blue line. Where do I get this line from? Well, just look back till yesterday. See the pivot right here? Which was a key level, by the way, we showed on yesterday's chart, which was right around 93.40 to 93.50. And sure enough, yesterday it was a key roll before the bounce up right to here, and we got this other line, and then we pulled back and broke down. On the downside today, we gapped up slightly, sold off. Where did we go? Right into that blue line before bouncing higher. So every level showing perfect symmetry, perfect moves in and out of these levels, guys. And in fact, what's going on here, as I said, Market pulling back a little bit. You can see a little bit of a pullback starting right here. We'll continue to follow this line. But guys, I mean, there's a reason why these levels work so well. It's because it's based off of everything technical in the markets that most people don't use. And people are just generally too lazy to study the charts. Bottom line, if you put in the time, it'll make you money. It's just like a normal job. You got to work at it a little bit. We do that. We teach it in our webinars, in our nightly videos, in our research center, which includes about 5 different services, and a new service is coming to that, by the way, in a couple weeks, and in the chat room as well. The chat room being a key play to where you're really going to learn. And look at that pullback, guys. I mean, I just call these levels. These levels are these levels. You can see the little pullback right there off 94.40. 94.40 to 94.50, sure enough, little retrace, that's resistance right there, simply put, guys. And now you're going to watch for pattern here, guys, because you do have a little bit of a higher double top. I want to see where this candle closes. Could you have a little mini M pattern starting? We'd have to see a hard pullback in the afternoon. I'm not sure if that's going to happen, and the reason why I say that is because volume is very, very light today. All right, you had the jobs, initial jobless claims this morning, really in line. No surprise there. Obviously, the Goldman Sachs news on both sides, whether it was oil and the other thing, that's having a positive impact on the market. If you look at Apple Computer, very strong today. ExxonMobil up 75 cents, very strong. Goldman almost up $7, very strong. So all these factors are pointing to the market having a bid under it today. So my point is this: with light volume and the dollar weak today and oil up, with these 3 stocks that I just mentioned, Apple, Goldman, and Exxon, all positive, unless they turn around in a sharp way this afternoon, you probably don't see a market that really comes in sharply. All right, and that's just putting the odds together. Now, should one of them or more of them one of these factors really reverse, if let's say the dollar really starts to spike, or let's say Goldman collapses, or Exxon or Apple, if any of that starts to happen, well then obviously the market could come down. But as long as those 3 stocks are strong, the dollar is down on the day, and oil is this strong on the day to the upside, very, very tough for a market to pull back. It's just like an underlying bid. Think about it being under an inflatable cushion that's getting blown up. You know, it's just gonna continue to add fuel to the fire or air under you and lift you up in the air. So that's really what we're looking at, but a good resistance, as you guys can see, working out perfectly. And I love these videos because they really showcase it live as things are happening, how these levels work out so beautifully. Right now, the Dow is just up a little under 50 points as we continue to trade here on this little bit of a minor pullback off that high pivot right here, and we'll have to continue to watch it. But again, watch pattern as well. As I said, you have a little bit of a double top right in here. It's a higher double top, which I generally like. If we break this 94.40 to 94.50 level and we close above it and confirm it, then you're looking at gap fill right up to here, guys. That would be your next major level. I'm going to even put that in for you all right now so you can follow that. That would be your next level. That's right around 94.80 to 94.85. So right in that level would be the next level should we get through 94.40 to 94.50 on the SPY. And again, this is the intraday 10-minute chart. That's what we really follow intraday. We also look at the 60-minute. I can show you that too perfectly. Now, one thing I want to just show you how it's important to look at multiple time frames is look at this high right here. See how this high coordinates with this? Also, I want to show you what that high coordinates on the 60-minute. All right, so we're bringing up the 60-minute. See right here where you hit it before you broke up? That coordinates with the 20 moving average on your 60 minutes. So it's telling us that there are multiple resistance lines both on the 60-minute and going back to the 10-minute chart right here. So if you're looking as a shorting opportunity in a market, you have to put the time frames together, and you really want to analyze that, and you can be so dead on by doing that. If you have a line in the sand that's on both chart patterns, on the 60-minute chart, on the 10-minute chart, and maybe even on a different time frame, maybe on the daily too, it's all coordinating, you're going to have an even better shot. The ratio of your win there will go to probably to 90 to 95%. All right, and it's all about it's all about ratios. It's all about percentages. I will never take a trade that I don't think there's a 80 or more % chance I'm going to win on. I usually like 85 or more %. That's just the way it is. You have to look at these trades as if it's a casino, but the odds are in your favor. And how high are they? How much are you willing to put money at risk for what type of percentage return? What is the risk-reward, basically, involved? That's all what you're calculating in your heads. Whether you're a swing trader, whether you're a day trader, whether you're a long-term investor, that's all you should be thinking about. Don't be listening to talking heads on TV. Don't be focusing. Do your own due diligence. Learn the charts. We teach that. We give guidance in our nightly Research Center videos. That's what it's all about. Obviously giving you guys the guidance, but then teaching you how we're coming to that guidance so you can really do it for yourself and confirm for yourself what we're saying. I would never ask anyone to follow me blindly. Never. All right, folks, just a little sermon there towards the end. Hope you enjoyed it. Thank you, as always, for viewing these videos. Spread them around. Tell your friends. We always appreciate the advertising, as we don't really do it at all for ourselves. Take care.